Hey everyone, it's Rob Folia, Folia Properties at Keller Williams Realty and author of Real Estate Reset. And it is the first week in March. You know what that means. It's time to look and see what's happening in our local real estate market. And before we begin, as always, if you're seeing this on YouTube, hit that like and subscribe button for me. That way you can help grow this channel. But let's jump right in and take a look because I know that the probably the biggest question I've been getting here over the last couple of months is about interest rates. If somebody's looking to move, obviously interest rates are impacting them because they're thinking about affordability. It's also impacting the person buying their home if they're thinking of selling, because that impacts how affordable their home is. And yeah, just taking a look here at Freddie Mac's website, looking at their study of interest rates, you can see, I mean, we're still hovering in the high sixes. I've always found these to be this number at least to be about a quarter of a percent, maybe even a little bit more than that, off from what you'll actually get from a lender. Maybe it's just trending. I guess because it's like, for instance, I'm doing this video here on Wednesday, March 5th, and these are the weekly averages as of last Thursday, the 27th. So that could be why it might be behind a little bit. Regardless, we're still in the high sixes to low sevens. Not much change, as you can see here, looking at the last year. I mean, the 52-week range, we're basically right there in the middle of this range. In fact, right here, well, it's got to change. Yeah, there we go. That's what I was looking for. 52-week average, this number right here, 6.75. We're at 6.76. We're basically right at the average. Believe it or not, I don't think it's a bad thing for rates to be this high. Obviously, it hurts affordability because when rates are this high, it just impacts how much a home's going to cost. But the reality is, rates being this high helps slow down the market a little bit. And we don't need, when we're in a low inventory market, which we still are by the amount of homes for sale historically, it's still considered low inventory. The reality is, we need this type of a market or these type of rates, excuse me, to keep the market from getting out of whack like it did 2021, 2022, where everything was selling so quickly and 20 offers in 20 minutes type of atmosphere. So regardless, that's where we are for rates. But let's take a look and see what that means for our current market. What I've got pulled up here, and the reason I wanted to start with months of supply, and I've just got Nashville's months of supply pulled up, is if you watched last month's video, you heard me talk a little bit about this. This was the first time we've seen this in like over a decade, that the months of supply, which if you don't know what that means, it just means if no other home hit the market, how long would it take the buying public to buy the every home that's out there? Just based on how quickly homes have been selling. 6.6 months was last month. First time we've seen it above six in over a decade. What did it do? It dropped a little bit, still close to six, 5.6. I haven't gone back more than a year yet. I'm doing all this live to tape, so to speak. Let's go back 3 years and see. It's probably the highest in 3 years, other than January. Let's see. Oh, not January of last year, 5.7. So we didn't quite hit it's the I guess the third highest in the last 3 years. I would imagine if we went back five, there wouldn't be anything that touches it now. So regardless, point being that I'm getting at is this is still high. Now it's dropped below six, but some economists think 5 to 7 months of supply, like that's that balanced market. So we're right in there. Usually real estate markets don't stay balanced, so to speak, balanced in that 5 to 7 range for long. Usually it sways one way or the other. Usually it's either going to drop and get back to that extreme sellers market or strong sellers, or it's gonna pop up and become a buyer's market. The thing that I would caution anybody in waiting and hoping that it becomes a buyer's market like we saw 15 years ago is this right here. Interest rates, even if home prices dropped a little bit, just say they dropped 10%, which I don't see happening, by the way. I'm just giving a hypothetical. Even if they dropped, say, 10%, did you know that in reality, from a house payment standpoint and all that, a 10% reduction in price is the equivalent to a 1% reduction in interest rate? That's just from a monthly payment standpoint. You can crunch the numbers and if you'd like to and see, but for every 1% rates change, it's the equivalent of a home price changing by 10% from a monthly payment, a principal and interest standpoint. So I say that because anybody who's on the fence and waiting and hoping that this becomes a buyer's market and that they can pounce on it, I wouldn't be. I wouldn't be banking on that to make bank, so to speak. And if you're a homeowner and you're thinking about, well, maybe I can afford my next home a little bit better. Maybe you're thinking about moving up, and you're like, well, I can sell my current place for a little bit less than I would have gotten, but I could, get a better deal on my next place. I mean, there is some merit behind that, but the reality is that if that happens and we're in a 9 month, 10 months of supply type of market, then it might be a little bit of a struggle to get your current place sold, and you might be in a way feeling like you're giving it away. And I want to show y'all a current neighborhood where I noticed a trend kind of like this. So I've got pulled up here as a neighborhood in Nolensville. This is Arrington Retreat. Great neighborhood. And the reason I wanted to spotlight this is it's a smaller neighborhood. I don't know how many homes are in here, but 200, 250, something like that. I mean, as you can see on the map, basically, this is the neighborhood. It's right off of Nolensville Road here, and these roads all connect. And that's about it. So 200, 250 homes maybe in this neighborhood, somewhere in that range. Could be a little more, could be a little less, but it's not the biggest neighborhood, but it's not one street either. That's all I'm trying to get at. Last year, so what I've got pulled up here is I've got every home that's either active or under contract. That's the green that you see on the map. There's five of them. And I've got every home that closed in the calendar year of 2024. So for 12 months. Now, it's not the last 12 months, obviously, but it's still, if for a 12-month calendar year, we've got, and I didn't pull up the last 12. I wanted to instead look at just 2024. And you can see there's five homes for sale, five homes sold in all of 2024 in the neighborhood. The reason why I say that is if you looked at months of supply we were talking about. So as the current market sits, 5.6 months of supply here. I'm curious. Let me just pull up Nolensville and let's see what we get when I do that. Um, in terms of months of supply. Nolensville is at 4.5 months of supply, 4.36, right? So still, as you can see, kind of trending upward a little bit, but it's still in that seller's market territory. The reason I bring this up is this right here that we're looking at. This is actually 12 months of supply because it took 12 months for five homes to sell, and there's five homes out there. So that's telling us that there's a whole year of supply out there in this neighborhood. That tells me this neighborhood might be approaching buyer market territory. It might be very much in buyer market territory. Now, it's tricky when you start getting into higher price points. Like if we looked at just the snapshot of Nolensville, you could see the median sales price 650, which wow, that's a huge interesting trend right here. We might have to spend some time looking at this here in a second. Both these are down about 20%, median and average here for Nolensville. But you can see the average and the median, 820 is the average and 650 is the median. These are above it. So it's an above average, above median neighborhood. That's going to impact some things too in terms of affordability. But that also tells me that hey, these homeowners that are on the market, they might be sitting for a minute. I in fact I didn't pull up. I should have pulled it up, in fact, but I was talking with a client of mine recently about their neighborhood, and we were looking at a home that had just hit the market, and I told her I thought it was overpriced, and sure enough, a month has gone by, it's still sitting. A couple of others have pended that are more affordable. The point being that affordability just creates such an impact on how quickly and whether a home sells. Um, let's take a look at some of this real quick. I want to see just like a trend line here for Nolensville. So Nolensville's a little different from Nashville because we just looked at Nashville. Nashville, there's more homes that sell. Like here, I'll pull it up. I think it'll let me pull up two. Let's see if I break real tracks trying to do this. So yeah, so it'll pull up two. As you can see, active inventory 1,500 in Nashville, 69 in Nolensville. So it's a lot smaller of a market. We're not looking at the same type of market, and yet it's still a big market here in Middle Tennessee, and it might be worth just keeping our eyes on. These are the lines that really would have me concerned. As a homeowner here in Nolensville, to sit there and say, all right, well, these are down 20 and 30%. Let's take a look at a timeline of one of these. Let's look at median sales price. Um, and let's go back 3 years. Now, the interesting thing that I've always found about smaller pockets when we look at things, so whether that be a area like Nolensville, looking at a smaller zip code, even just looking at a neighborhood, yeah, it could be a large neighborhood, but um, where prices might vary. The reality is you're going to see that it's going to look like one of those EKG medical charts when we look at a trend line like this. And this does not mean that from in February of 22 to November of 22, that what's the difference there? Almost nine hundred and 69,000 to 750,000. That does not mean that everybody's home went up in value by $200,000 in 9 months. It just means that's the sample size of the homes that sold in November of 22 was a lot larger than, a lot more expensive, I should say, than February 22. But the interesting thing to me, and this is why I wanted to pull this up once I saw it, look right here. This $650,000 for a median sales price in Nolensville last month, that is the lowest we have seen in the last 3 years, by far. In fact, the lowest before that looks to be this number, April 23, where it was 721. That's a huge dip. Now, it very well could be just a dip like this, like this was a spike. And so I wouldn't be surprised if next month, it was closer to this line right here. But that's definitely something to be concerned of. And if I had to guess, I bet you I could find something similar like that in most areas. Let's go back to the snapshot. We look at average sales price too. I mean, again, you can see that type of rise and dip. I mean, that's just going to happen in these smaller areas. But it's just interesting to see. The encouraging part for anybody who lives in Nolensville, the fact that months of supply as a whole is still relatively low. I mean, you can see it's trending upward here, but it's still relatively low. It's still less than 5 months. We could be in a worse spot in Nolensville, but just the reality of what I'm looking at. Um, the other thing that I would be concerned about, and this kind of goes back to that cautionary tale I told you all about a second ago, and that's right here, average list price. So we're seeing a deviation from the norm or deviation from the numbers, and the shame on the real estate agents that are pricing their homes this way. Because look, we've seen average sales and median sales price go down 20 to 20, 19 to 28% here in the last month over month in February to February. But look at this, we've seen the average listing price go up by 3%. Now that's telling me and if I had to guess, and I haven't priced out these homes, these homes might all be priced correctly, and for all I know, these homes that I have that are pulled up on the right side, they might be worth every penny of that. I'm not trying to say anything negative about these listings whatsoever, but my guess, based on what I'm seeing here and what I'm seeing in these two lines, is that these agents said, and I'm not trying to throw anybody under the bus. My guess would be they might have overpriced their homes, some of these homes. Now, you know, I've seen, and the reason I wanted to pull up this neighborhood is I saw seemingly overnight 4 or 5 new listings hit the market. So you can see right here, 12 days on the market, 5 days, 15, 11, 22. That's an interesting trend that five hit the market so early here in February. None of them have even hit a month yet, but the reality is none of them have sold yet either. And so again, that's just kind of a warning sign to me that tells me, hey, maybe there's something going on here. Pricing is not um, in line with what the market's actually going to do. And again, just throwing that out there. But anyway, I could ramble on this stuff all day, guys. If you want me to look at something specific for your home, your situation, your neighborhood, just hit me up. You can hit reply if you're getting this in your email. If you're seeing this on socials, just email me, rob@foliaproperties.com. You can always text me as well, 615-238-7578. Happy to help y'all however I can. I hope this has been informative. Hope it's been enlightening in terms of what the market's doing. And until next time, guys, thank y'all so much for checking this out. I'll see you soon. Bye.